Good morning. It is Thursday, January 24th, 2019, and this is the Saxo Bank Morning Call. I want to start off the top of this program with the Aussie dollar. We have a chart here overnight. We're getting those the latest jobs data for December. The headline looked okay, but at the full-time employment not looking impressive, and the participation rate dropped, which is the the reason behind a slightly lower unemployment rate, which is the lowest for the cycle here at 5%. But if we look at that chart again, that Aussie, the reaction is quite obvious there. We had a little bit of a spike higher and then dumping lower. The market is really concerned about the housing market in Australia, concerned about the trajectory of Chinese growth, maybe a little bit less interested in the fact that China is supporting its currency right now, and we're seeing a lot of negativity. I think one of the other news items out overnight is Australia, another of the big four Australian banks, National Bank, raising its mortgage rates, which is obviously going to feed into more worries that housing prices could continue to provide a credit crunch that ends up with RBA easing. So a lot of pressure there on Aussie across the board. And then on the opposite side of the spectrum, in terms of weakness and strength, is sterling. We have a chart here on sterling of in terms of versus the dollar, and euro sterling and other sterling crosses also, and sterling Aussie for that matter, also gunning higher. Sterling because of the noise level increasing. We're going to get an Article 50 delay here. I'm a bit concerned the market is taking this issue a bit too far, too quickly. Is May's gambit here to try to force the Remainers, force those that want to line up against her initiative and her plan to really prove themselves here, and that is the issue here, whether we do end up after all with a cliff edge Brexit. The market is very loudly voting no, and I would just say that all the risks have not been completely eliminated. Jacob Rees-Mogg, the rather infamous Tory conservative of the so-called European Research Group, arguing that May could actually suspend Parliament, not dissolve it, but there's a procedure called proroguing in which she can stop Parliament for 3 days, and this would eliminate some of this talk that Parliament is going to completely seize control of the entire process, and what is effectively a challenge to constitutional precedent over hundreds of years. So very dynamic. Maybe sterling is going to head higher here. If we do get this delay, maybe there's another few percent higher on sterling. That seems to be what the market is favoring. I would just argue that we've really sloshed very heavily to the one side. And then on equities, Kim, I'll bring you into the picture here. We saw a little sell-off. We have topped out a little bit here after a really remarkable bounce from those December lows. What are your thoughts, just really broadly on equities?
Broadly on equities, seems like we have had, as you said, very nice correction higher since around New Year. And if we look at the UK 100 chart here, we can see that it seems like it's tested 7,000 a couple of times. Can't really break it, and now we are trading a little bit lower. So I had this put in this dashed line around 6,800. A break here today, and we could see that today. We saw some weakness last night in US, so maybe it will continue today. So a break below there, well, then it looks bad again for stocks.
And interesting to note, locally, last couple of sessions of sterling strength actually feeding into more weakness like for the FTSE 100
contradicts each other a little bit,
relative to the other major indices. You also got a NASDAQ chart here. We have one of the highest profile tech companies, Intel, at least traditionally. It's not as big as the huge ones now, but reporting today, we've kind of bogged down a little bit here as well.
Yeah, what's actually interesting on this NASDAQ 100 chart, as you can see, I circle in the past 5 days of trading, and it looks like we have this doji evening bearish pattern here, and it just basically touched within 1 point the 764 retracement. So it's going to be interesting here. Will this continue? It is normally a top and reversal pattern. It's something you usually see in after a long uptrend, but this time it seems like it's already stepping in.
Yeah, pretty compelling little evening star formation. The three candlesticks with the up and the small sort of abandoned little doji star. Very interesting. So we'll see what that happens. Maybe Intel news, how it's taken, could be interesting. Intel, one of these big chip companies, and its earnings have really outperformed in recent quarters relative to what was the trend previously. Is this threat of the server market from AMD later in this year, is this beginning to weigh on expectations, even if they do report very strong results? We'll see. And then finally, just on the equity side, Kim, the DAX, we did manage to break above that channel you talked about.
We did indeed, yes. We did indeed.
But what are your thoughts there? It looks a little bit less bearish locally, at least relative to some of the other indices. Is that euro weakness maybe playing in?
It could be. It could be. It was a strong move higher than 11,000. It opened higher. It moved massively higher. I think it was 2% breakup. But it seems like it's just fizzled now. So if we move back below 11,000, bears could really come back in control, and the bear sentiment could resume here.
A pretty compelling line on that chart. So that leads us, to the big event risk of the day is this ECB meeting, and what are we looking for there? We have a chart of euro-dollar. We've shown this ad nauseum. I mean, we're really waiting for a sustained break either above 115 or below 113. That 113 level is a bit closer. That's the horizontal line you're seeing there. Some dovishness clearly priced into the picture here for the ECB. You have expectations that Draghi is going to have to downgrade the language. We're wondering if the entire anticipation towards a rate hike after summer or at the end of summer is abandoned, and the degree to which we see Draghi opening up for potential new easing. The idea being that the TLTRO is going to be the first method that could be used rather than some new QE program. This will be all in circulation over the press conference. And as well, we've got this morning, we'll get to the calendar later, but this morning we have those key PMIs, the flash PMIs for January that might add a little bit to the noise around that ECB meeting. I think negativity on euro very much justified. The question is how much is in the price near term, and how much are traders just sick of this very sluggish trading range and still waiting maybe for a U.S.-China outcome for a bigger dollar view? Do we risk just getting bogged down in treacherous price action with no firm direction? Even if we do head a little bit lower, does it really sustain a bigger move? I think that would be the concern for bears, even though we're among those that are bearish on the euro. And then feeding into the dollar view as well as central bank response in general. I think gold is an important proxy for central bank outlook in general. We have gold. And gold is finally topped out. 1,300 was a huge level. It didn't.
Just
really
a few points off.
Neglected to take that out all in one go. I mean, it was a very persistent long rally from that base. I did note, Kim, I don't know if you track trading ranges, but I have just on one of my models, I look at where trading ranges are relative to history, and we're at like almost 1,000-day lows in terms of the price trading range in gold. So to me, it's not a lot of energy in that previous move in terms of excitement in terms of trading ranges. But it's correcting now. Where are your targets for a correction here?
Yeah, I mean, first of all, we should look. If we can look at the chart again, we can see just a few points below 1,300 several times. And now we're talking about 1276, 75, 76. You can see the dashed line, horizontal line are drawn there. And you can also see the rising trend line, longer rising trend line there. A break below both of them, well, then I think we could go down all the way maybe to the 200 moving average, which is coming in there. You can see the red line, the red line coming down there. So 12, maybe even 1250. Bigger correction, but again, it has not been a really massive move up. So it's
if you zoom out to weeklies, you're talking about which we don't have, but if you zoom out to weeklies, we're talking about pretty mild stuff.
It is pretty in the bigger scheme. It's bigger picture. It's pretty mild stuff. Yes.
All right. Great earnings calendar for today. Again, we have that Intel report out today. I'm really curious about this one. It's been outperforming recently in terms of its growth rates. It has 99% of the server chip market, and there's for the first time in a very long time, we're having a credible competitor being released mid-year by AMD. So it might be a bit more about how the market weighs forward expectations versus the current reality. I think it might set the tone for tech stocks as well. So keep your eyes on that one. And then our calendar for today, if we head to the macro overview, we've got that ECB announcement. We have the Norges Bank, which I haven't even talked about. There's zero expectations around that. I think Norwegian krona very much a proxy for risk appetite and for the direction of oil prices combined there. Looking for Euronoki. Tried to break below the 975 area and has so far failed. Could have a tactical squeeze risk higher if risk appetite is exceptionally negative, but that's the key sort of pivot area for Euronoki. Again, heading into the ECB announcement, we have those flash PMI surveys, both on the manufacturing and services side. If we're seeing a further negative tendency there, I think the market is really starting to pick up the concern level for how the ECB will respond. March is when they have the projections. They do not have the economic projections this time around. So if we expect a bigger move, the most we can expect, I think, this time around is a setup meeting for a March move. Press conference at 13:30 GMT, and then some minor U.S. data points out later in the day. And then, of course, we get into the Parliament. I think the Brexit situation picks up more next week as we see how Parliament, to what degree Parliament is trying to seize control of the process, and all kinds of constitutional questions this brings for the UK over that process next week when this Plan B vote is up on January 29th, which, if my calculations are correct, is on Tuesday. And then we have an FOMC meeting next week as well. So it should be pretty dynamic, I think, next week if the ECB does not set something in motion already today. That's it for us today. We'll be back tomorrow with the Saxo Bank Morning Call.